decades, the AirAsia relies more heavily on the debt financing, which poses a higher financial risk compared to Garuda Indonesia, which has managed to slightly reduce in its debt ratio. Next, looks looks at times interest earned, which means a company's ability to pay interest obligation. In 2022, Garuda Indonesia had a tie ratio of 9.54 times, which dramatically dropped to 0.51 times in 2023, showing a significant decline in their ability to cover interest expense. AirAsia AirAsia Indonesia, on the other hand, had a negative tie ratio in both years at -5 times in 2022 and -3 times in 2023, indicating critical financial struggle to pay off their interest obligation. The paints a future of both companies facing difficulties in managing their interest payments, with Garuda showing a step decline and AirAsia operating in negative territory. Asset management efficiency ratio. Now moving on to total asset turnover, which how efficiently a company use its assets to generate revenue. PT Garuda Indonesia improved slightly from 0.3 times in 2022 to 0.4 times in 2023. PT AirAsia Indonesia, however, saw a significantly increase from 0.7 times in 2022 to 1.08 times in 2023. This indicates that AirAsia is more efficiently in utilizing its assets to generate revenue, while Garuda lags but saw a modest improvement. When we focus specifically on fixed asset turnover, which measure the efficiency of generating sales from fixed asset, PT Garuda Indonesia improved from 0.4 times in 2022 to 0.5 times in 2023. PT Air Asia Indonesia once again outperformed Garuda, increasing from 0.7 times in 2022 to 1.14 times in 2023. This highlights that Air Asia much more efficiency in using its fixed asset to drive revenue compared to Garuda. Conclusions. In conclusions, while AirAsia Indonesia demonstrates superior asset management efficiency, but in the terms of total and fixed asset turnover, it also bears significantly higher financial risk due to its high debt ratio and negative times interest earned. Garuda Indonesia, meanwhile, has a more conservative capital structure but struggles with asset efficiency and a declining ability to meet its interest obligation. Overall, the data suggests that while AirAsia is better at leveraging its asset to drive growth, its financial risk is also substantially higher. Thank you.
Last but not least is the profitability ratio, starting with operating return on investment or OIROI. In 2022, the operating return on investment for PT Garuda Indonesia is at 63%, meaning that for every dollar the company invested in its core operation, they get 33 cents in return. This level of return is well above typical benchmark for most industries. indicating that the airline is effectively managing its resources to maximize profit. Sadly, that number decreases significantly to only 3.5% in 2023. This is related to the decrease in operating income that year that went from 3,935,160,004 US dollar in 2023 to only 234,589,145 in 2022. In the other hand, PT Air Asia Indonesia is experiencing a negative OIROI in 2022 and 2023, with the OIROI reaching minus 30.6% in 2022 and minus 17.40% in 2023. Overall, PT Garuda Indonesia seems to be doing fine in terms of operational efficiency, whereas PT Air Asia Indonesia seems to be having some financial distress for the last 2 years. Up next, operating profit margin or OPM. In 2022, PT Garuda Indonesia has an operating profit margin of 187.38%, which is an exceptionally high level of profitability relative to its operating revenues. My guess is that this happened just a few years after the pandemic, so many people took the opportunity to travel where they could have not before. In 2023, the OPM went down to a stable 8%. In contrast to PT Air Asia, which seems to have suffered losses in the past 2 years, it can be seen from their operating profit margin that are in the negatives. Their operating profit margins are minus 43.4% in 2022 and minus 16.06% in 2023. Overall, PT Garuda Indonesia seems to be more stable in terms of generating profit from its core operation by accounting for variable costs such as wages, raw materials, rent, utilities, payroll expenses, etc. Thirdly, we have net profit margin. In 2022, PT Garuda Indonesia's net profit margin reached 178%. Depending upon market condition, achieving such high net profits indicates strong operational efficiency, higher than average pricing strategies, or reduced overhead costs relative to peers within the same sector. However, in 2023, it came down to a stable 8.6%, which is best for the sustainability of the company. Same as before, PT Air Asia experienced negative net profit margins in both years, although it did improve in the later year, from minus 43.5% in 2022 to now at minus 16.3% in 2023. A negative net profit margin indicates poor financial health and stability. Overall, PT Garuda Indonesia experiences a high fluctuation in 2022 and then it came down to a stable number, whereas PT Air Asia has undergone some difficulties in their economic health. Next is the return of equity. In 2022, PT Garuda Indonesia has a return of equity of 175.3%, which is highly unusual. After undergoing significant restructuring efforts, companies like Garuda Indonesia might experience temporary spikes in profitability due to reduced debt burdens and optimized operation. This could theoretically lead to an unusually high returns if they manage to maintain these improvements. In 2023, the return of equity of PT Garuda Indonesia sits at an 11.8%. This reflects moderate to good financial performance relative to its peer group within the airline industry. A negative return on equity indicates that PT Air Asia has been generating losses relative to shareholders' equity over both years, where the return of equity of PT Air Asia Indonesia sits at a minus 61.6% in 2022 and minus 40.4% in 2023. Since net income is negative when calculating return of equity, shareholders' value is decreasing over time due to these losses. Next up, gross profit margin. A gross profit margin of 60.9% in 2022 suggests that PT Garuda Indonesia is effectively managing its direct costs associated with providing services, such as fuel, maintenance, and crew salaries. This level of profitability indicates healthy operational efficiency, although it seems there is a significant deterioration in the airline's operational efficiency and profitability, where it reaches 8.2% in 2023. A gross profit margin of minus 43.5% in 2022 indicates that PT Air Asia Indonesia has been dealing with some difficulties economically. In 2022, the revenue that was generated are less than its direct costs. However, PT Air Asia managed to raise the margin to a minus 16.05% in 2023. And lastly, return on assets. Having a return on assets of 59.93% in 2022, followed by a decrease to 3.74% in 2023, indicates significant variability in PT Garuda Indonesia's financial performance relative to its asset utilization efficiency. Having a negative return on asset for PT Air Asia Indonesia in both years, where in 2022 it sits at minus 30.74% and in 2023 it sits at minus 17.67%, indicates significant financial challenges and operational inefficiencies within the company, where the total assets are greater than the income it could generate. That is all from us. Thank you for watching and goodbye.